Alright, now let's understand with the help of an example what if you have received the fee in advance. So this is the core concept. If you understand this concept, that will be very helpful for you. So suppose you have received 27,000 in advance on 1st of August 2024, and this is your full fee for the academic year, which starts from September 24 to June 25. So this is for 10 months, right? This cash, this will be in the balance sheet. This is your asset, and as far as this amount is concerned, you will not recognize this 27,000 as your income on 1st of August 2024, but you will recognize this as your unearned income, which is a liability, and will be presented in the balance sheet as the liability. At the end of the year, what will happen, your as at 30th of June 2025, your unearned income will be debited and all this amount will be recognized in as your revenue or income. This will be shifted to profit and loss account. However, the monthly entries would be like this. Maybe this might be happening at the back end in your ERP system, but the concept behind. So every month the amount will be transferred from unearned income, which is your liability account, to revenue account from September to June, and there will be no entry or transfer in the month of August. Why? As I told you over here, no performance obligations are satisfied in the month of August. So it will start from September, and every month amount will be transferred from unearned income to revenue account. Unearned income is your, in the balance sheet, it is your liability account, and it will be shifted to your revenue account. So this was the scenario in which there wasn't any discount allowed. So let's understand the same concept if there is discount as well. So nothing will change, all the entries will be same. However, in this here you have received 27,000, but what if you are allowing some discount, which is say 20% of this amount? So 20% is the discount. So what you will do, you will debit your cash or bank with 21,500, because this is the amount that you have received in cash in the balance sheet as an asset, and you will recognize a deferred discount account. As you know that a deferred income or unearned income is your liability. So similarly, at the same spot you have recognized the deferred discount, which is your an asset account, because this account, when you will recognize the revenue at the same time, at that time you will use it. Let's see how it will work. And you will recognize unearned income with 27,000. This is your gross amount. So that now at the end of year, once the year will finish, we assume for the sake of understanding you haven't made any entry, and at the end of the year you have provided all the services, and now you want to make the entry. What you will do, you will debit your unearned income with 27,000, because this is no longer your liability, with 27,000, and you will credit your revenue with 27,000. But hold on a second. So what you will do, you will debit discount allowed, which is an expense account, with 5,400, and you will credit this. You will what we are doing, we are removing it. So you will credit this with 5,400 and debit this with 5,400. So this amount has been shifted from asset to expense account. So asset is being credited and this expense is being debited. What ultimately is being happening over here is that your gross revenue is being recognized with 27,000, then direct expense or whatever you call it, then discount allowed will be 5,400. So your net revenue is recognized at 21,600. So this is what will happen at the back end of your ERP system, or what is happening behind this all, if you will do this these entries as per accounting principles. So this is how it will work. What, and the same if you want to do the monthly entries, this was just for the sake of understanding. I give you the example that if you do one entry at the end of the year, so that the concept is clear. So what if these entries were being done monthly, what will happen? Unearned income debit with the gross amount of 27,000, 2,700, and revenue credit with gross amount of 2,700. But we have discount as well. So what you are doing is that you are recording the discount separately. You have recognized one asset in the beginning and you are converting this into an expense every month. So then discount expense account debit here in the P&L, and in the balance sheet that you have initially recognized your deferred discount, because deferred income is your liability, so deferred expense would be your an asset. So again, no entry for the month of August, which I told you the reason.